Investors still express risk aversion amid rampant infection rates in the United States and other countries worldwide. Wall Street opened in the red. Dollar pools are taking the advantage, having pushed the US dollar index above 97.40. The US is due to release a series of macroeconomic data. Investors priced in zealously the rapid economic recovery following a severe downturn. They pinned hopes for the vaccine invention in the near future. At the same time, the market downplayed such troubles as massive job losses and insolvency of businesses. At present, it becomes obvious that the culprit, which entailed a train of economic problems, has not been stamped out. Moreover, things are getting more painful. The epidemic is again out of control. As a result, Wall Street closed yesterday with a 3% fall due to the risk of the second outbreak. The outlook for the US stocks is negative. Futures on the Dow Jones lost nearly 1% in the early New York trade to trade at 25,152.5. Futures on the S&P 500 dropped 0.68%. Today, stock markets are focused on the results of annual stress tests for banks that will be unveiled by the Fed Reserve. Meanwhile, the US dollar suggests lucrative investment opportunities, enjoying buoyant demand amid risk aversion. Its index has been growing for the second day in a row. In the early New York trade, dollar buyers nudged the index towards 97.6. though the index failed to secure this level. Today, the greenback depends on a series of macroeconomic reports. On the whole, the market believes that the US dollar will be able to win back heavy losses. The economic malaise and a relapse of strain on financial markets are set to prop up demand for the US dollar as a safe haven asset. The revised US GDP contracted 5% sequentially in the first quarter. It's the steepest fall since the crisis-stricken 2008. Economists had expected a more moderate decline of 4.8% in the first estimate. Weekly update on the US labor market revealed worse than expected data for 2 weeks straight. The number of initial unemployment claims fell just 60,000 to 1,480,000 last week. The market had projected a sharper decline to 1,300,000. The Canadian dollar lost ground amid an advance of its American rival amid the risk of mood. Besides, the euro is also trading lower. The USDCAD pair reversed upwards. This correction is clearly seen on the 1-hour chart. Analysts do not rule the pair's climb to 1.36. If resistance at 1.3686 is broken, this will signal the uptrend in the medium term. The scenario of a further slide is at the least probable. That's all for today. We continue to learn developments on financial markets. Stay tuned with us. See you tomorrow.